the reason we are in South America is because it's a copper project. We don't drill for anything else other than copper in Chile or South America for that matter. We didn't go to South America to chase gold. We have plenty of gold targets between Egypt and West Africa. For us, the South American play is all about diversifying our commodity mix and our country mix.
Geodrill is a leading drilling services company for the mining industry, operating in West Africa, Egypt, and Chile. They just released their 2025 financial results, and CEO Dave Harper is here to discuss them. I'm Martin Gago with Market Radius Research. Please remember this is neither a recommendation nor investment advice. We're here to learn about the company. Dave, welcome. Good to see you again.
Good to see you again, Martin. How are you? Good?
I'm doing very well, thanks. Very
Good.
well. Yeah, you put out your numbers, a bit of a mixed bag. Great revenue growth, some challenges on the margins a bit, but you looks like you're doing things to work through that. Why don't you give us a quick overview and we can chat about the numbers.
So 2025, very solid top line growth. We produced almost 185 million US dollars in revenue. That was up 29% year over year. So we really couldn't be happier with the top line growth. From compared to where analysts had us earlier in the year at 170, 175, I think we far exceeded everybody's expectations. We did, as you pointed out correctly, come under margin pressure. And that was for a couple of different reasons. I'll break that down into the big buckets. We grew aggressively in South America. We grew the rig fleet from what was 8 rigs a year ago to 18 rigs. We ended the year with 18 rigs. So it's more than 100% growth in South America. This is on the back of very, very strong demand and new marquee accounts that we had signed. And what happens in my world is when you're doing that sort of growth, what's happening is all your costs are front loaded, and so you tend to grow the revenue line, but you're carrying the pre-financing all the cost of getting those rigs out into the field. So first thing that grows is you have the costs that are pre-financed. The laggard is the revenue, and the third leg in the train is margin. So we expect that in 2026, with what is now 100% utilization of the fleet, we don't expect much top line growth in South America. What we do expect is for margins to normalize. So that's a situation that water should find its own level in 2026, and that's what we expect. Another interesting one, which was unique for us, was that in Ghana, in West Africa, the Ghana cedi, which is the local currency, appreciated by 45% from about April. And our costs are largely in local currency, but our revenue is in US dollar. And so that was a unique situation, which we have not. It was quite precedented in that we'd never experienced this in the full 27 years of the company's history. So two very one-off situations occurring there that affected our gross and our EBITDA margins.
Because just to clarify, Dave, your head office is there, but that's where a lot of your fleet maintenance and your repair stuff is done. So you have, and those are, I guess you'd call them fixed costs, but those costs are based in that country and that currency, right?
Yeah, Ghana is actually the largest contributor to our revenue. It's our busiest
Oh,
market of
okay.
all of the markets, the 6 markets that we operate in. Ghana is our largest, and that makes sense because it's where we actually started 27 years
Yeah.
ago. And so Ghana has always been our biggest market. Our second biggest market is Ivory Coast, and between those two markets, they speak for about 70% of the business. So Ghana's about 35%. Yeah,
Yeah. Okay. So then the operating costs, the drillings, the rigs, as well as head office stuff is all based in that currency.
that's correct. Yeah, yeah.
Gotcha. Okay.
Mm.
All right. Is there anything you can do to offset that going forward, or has the currency sort of normalized a bit, or how are you going to manage that
Well,
currency?
the obvious question that comes up is could we have hedged? And the answer to that question is yes, we could have. But the point
Yeah,
is, as I say, the situation is quite unique. In the 27 years, we've never experienced this before. It's
yeah,
unprecedented, and had we hedged for 27 years, then it would have actually cost us more than to not have hedged.
yeah,
What levers can we pull? Well, we have long-term contracts there, which are US dollar denominated. So can't really increase the pricing on the jobs, and we can't really lower the salaries of our workers because, of course, they'll probably go looking for other jobs. So about the only lever that we can pull really is to, as and when new contracts come up for bid, is to increase pricing to capture those increased local costs.
yeah.
And so that's a work in motion, but it's a work in progress. But it's a long game. It's going to take time. The other thing is that the CD will more than likely, most analysts are saying that the CD will begin to normalize at some point. And the things that have driven the CD strength have been the fact that Ghana is a large gold producing nation, and of course gold is doing very well. The other
Yeah.
thing is Ghana is a large cocoa producing region, and cocoa is doing very well at the moment. So, but these
Yeah.
things never remain the same forever, and eventually, as I
Yeah.
say, water finds its own level, and the currencies will normalize or pricing. The price of drilling as and when new contracts become up for tender, we'll be able to renegotiate them and capture those costs.
Can we talk about Egypt a little bit? How the dynamics in the Egyptian market?
Egypt's going well. Very pleased with the Egyptian market. It spoke for about 15% of group revenue for the year. That was up
Yeah.
significantly on the previous year. Egypt is just a market that we're very comfortable in. It's going very well for us, and as I say, it's one of our newest markets. We're very keen to keep pursuing work into the MENA region. We're also looking at expanding beyond the MENA region. Within the MENA region into other Middle Eastern countries. We're quite comfortable in those markets.
Yeah.
As well, the prospectivity is great.
And other Middle Eastern nations, specifically Saudi Arabia, or are there other ones?
Specifically Saudi Arabia. Yeah, we're really keen on Saudi, and it's taken us a couple of years to get everything up and running and registered there. We're actually now in the advanced stages of tendering some projects there. If anything, we actually have a shortage of rigs, actually.
Okay.
So all good problems. Plenty of customers, and
Yeah.
not enough rigs. While we're speaking of rigs, actually, our rig fleet topped 100 rigs. So we've hit a
Yes.
very interesting milestone in the history of the company. And I'll just remind you that we started in 1998, 28 years ago now, with one rig and one contract. And here we are today with 100 rigs, and that is 100% organic growth from the first rig right the way through the fleet. Rigs that were basically bought from profits from revenues generated from more revenues as additional rigs would increase revenues and so on and so forth. So very happy
Yeah.
with that result. Yeah.
Yeah. Do you see the rig growth continuing at the same pace? Because when you're at the size you are, growing 20% when you're at 100 million of revenues is a lot different growing than 20% when you're at $20 million of revenue. Like that's just a lot more rigs and a lot more coordination and organization to do. How are you going to manage that growth going forward now that you're really at a different scale than you were just a few years ago?
Yeah. Well, you might find this a little odd, but we're going to do something that a lot of folks would probably not do. But I'm going to tell you that we're going to back off on growth. We're at
Okay.
100 rigs. We're at 100 rigs, and that's a very comfortable number to be at. I believe that we now have reached a stage where we will not continue to grow as aggressively. There will still be the need from time to time when our marquee accounts will need rigs, and of course we'll be only too happy to support them. But as in growing aggressively in a market that we're in currently, where it takes The lead time to build a new rig now is out by a factor of 3x. The cost of a new rig is gone up quite significantly, and this is not the market you really want to be growing aggressively in.
Yeah.
Our growth, most of our growth occurred when the rest of the industry was in its down cycle, and we were buying our competitors at 30, 40, 50 cents in the dollar. And so a lot of that great work that we did earlier on has set us up very, very nicely for what will become a business which owns 100 and 100 plus, but call it 105 or whatever rigs. We've now got the rig fleet that we need. That,
Yeah.
I can see getting us to $200 million in revenue probably this year. Originally, a few years ago, I was saying it might take us till 28, 29 to get there. I think we're actually going to accomplish it in 2026. If you look at what we just turned over, we've done 185 in 2025. So we'd only have to grow by 7 or 8%, and we're there. That'd be a pretty unusual year for us to only grow at 7 or 8%. What we need to do is focus this year on margin. We've done a great job on the top line last year. This year we need to focus on the margins. And that's really going to be key for 2026.
Well, I guess, sorry, going back to, I believe it's in West Africa, there was also a challenge you had with a bunch of your clients switched from RC drilling to core drilling, I believe it was, and that is, I guess, lower margin business for you. Could you unpack that a bit?
Yeah, so what happens is we make the majority of our work when we're doing RC, and our margins when we're drilling diamond drilling only. We just find that our margins are lower, and we just had a situation where a lot of our customers wanted to drill more diamond than they did RC, and so that was just another factor that from where we experienced the margin compression.
Was that just a kind of a one-off for a quarter or two, or is that more of a shift to I don't know where why your clients are doing that, where that's more systemic? Yeah, future quarters will be like that as well.
It was just unusual, and
Okay.
the fact that we were able to say to our customers when they say, we want to drill RC drilling, or we want to do air core drilling, or we want to do deep directional drilling, like to do water wall drilling or geotech drilling. The fact is we provide the full suite of services, but we have no, we have no knowledge of what that drilling is going to be at the beginning of any quarter. It can change on a dime. But the fact that we're able to step up each and every time our customers ask us to do that, and the answer is yes, we can. And that puts us in the position that we're in. Our customers are constantly retaining our services. We've got accounts that we started drilling for 27 years ago that we've never stopped drilling for. And this has resulted in decades, not years, but decades of recurring revenues. And that's been the key to our success. Keep the customer satisfied.
In South America, you've sort of focused your business into Chile right now. You had some rigs in Peru, I believe, and now they're all operating in Chile, which as you grow there and like that, there's some upfront costs. You discussed when you're growing a rig, it entails some upfront costs. Can you what was the decision to move exclusively into Chile? And just explain, because you're obviously you more than doubled your rig count there, so you're showing exceptional growth there. How does that all play out?
So we moved to Chile on the back of one contract, and one particular name down there was asking us to come and do a specialized job, which we call deep directional drilling. And it seemed apparent that they'd tried most drilling contractors in Chile to perform this, and with varying degrees of success. We saw this as a challenge. We mobilized a couple of drills, and we were able to provide that customer with what they were looking for. And they made a discovery, and on the back of that discovery, of course, they ordered more rigs, and they made a further discovery, and of course, they ordered more rigs. Their neighbor, who'd had similar challenges trying to drill this particularly difficult project or this area, realized that we might be able to help them. And of course, we were invited to tender. We were successful with that tender, and that. So now we're working for two names and multi-rigs, multi-year contract. So another customer up the road heard about this. So it was really just a case of two friends who tell two friends who tell two friends. So it's been the growth in Chile, I've got to tell you, has been significant. We've been inundated with inquiries since that first initial discovery. Whilst at the same time, the Peru market for us, we were just having less success in terms of being able to get onto a project that had any sort of sustainable prospectivity to it. And so we just weren't experiencing the same secure, if you will, in Peru. So you go where you feel welcome, right? And we just felt very, very welcome in Chile. We were pleased with the move into Chile. We've had nothing but success since we arrived, whereas as Chile was growing, Peru was getting smaller, and we just reached a stage where we only had one or two rigs running, and running one or two rigs in a single country just doesn't really work, particularly when the nature of the work is stop-start. So we just took the decision to just shut Peru down, at least for now. We're still registered there, but we essentially curtailed all of our operations, and we have mobilized all of our people. They don't have a single rig in Peru as we speak. Now, we could, if we wanted to, if things were to change and someone was to come along and say, hey, I heard you did this great job in Chile. Could you bring 4 or 5 rigs back this way? We could certainly do that if we had the rigs available. But as we speak, we have 18 rigs in Chile, and all of them are drilling, 100% utilization. Every rig is drilling. So we all good problems. We just wouldn't have a spare rig at the moment. And for now, we've reached our quota. We're comfortable with the amount of rigs that we have in South America. We're going to just focus less on growth and focus more on, happy with top line growth. Now we need to bring that bottom line up so that it gets to more traditional levels for Geodrill. Yeah.
The Chilean operations now that you've got things set up there, do you expect, like, for the remainder of the year being more normalized margins coming out of there, or do you still have some tweaking to do? And then, sorry, I'm adding a lot into this question. I believe the seasonality, which is sort of good when it comes to seasonality, is counter-cyclical to a bit of that in West Africa. So can you talk about that?
So with our growth in Chile, we're almost there. Up until late last year, we had 14 of 18 rigs spinning, and we thought, well, this is fine. We've got 4 rigs as spare capacity. Should we need to cycle some rigs out, move some rigs onto different jobs, or bring rigs in for maintenance or whatever. And then suddenly we became completely inundated with a further inquiry. One customer, a new customer, wanted to take our last 4 rigs. And so during the latter part of Q4, we were busy getting those 4 rigs prepared to go out into the field. And those rigs are actually now going out into the field. So that will be the last leg of mobilization, if you will, which will occur actually during our Q1. And so we will see the benefit of that in Q2. Now into Q2 and going forward, the thing that normally happens is it gets on our high altitude job that we have around June. That program shuts down, and we lose the revenue from that job. But all in all, I think over the full fiscal 2026, I think that what we're looking at is a better year, an improvement year over what it was last year.
In Chile, June is their winter. So that drilling program at the high altitude, does that get reinstated in, I don't know, September, October, or whatever, in their springtime?
September. And what's the other thing that's actually happening with that particular customer is they actually have acquired some ground in the lower country, and the plan won't be in place by June, unfortunately. But it is planned that next season they'll be able to take the rigs from the high country and put them down to the low country,
Nice.
so that to help us to actually operate more profitably. So, yeah.
Yeah.
And so it's a case of them helping us so that we can continue to help them. And that's what
All
we
right.
really need to make the thing work. I'll just remind your viewers that the reason we are in South America is because it's a copper project. We don't drill for anything else other than copper in Chile or South America, for that matter. We didn't go to South America to chase gold. We have plenty of gold targets between Egypt and West Africa. For us, the South American play is all about diversifying our commodity mix and our country mix.
So, and switching back to given country mix here, we talked about Saudi Arabia, you're bidding on some projects there. If things would go reasonably well, is that revenue that could kick in 2026, or would that be something more for 2027 and beyond?
So we're currently actually bidding a project, and we've been given pretty much a heads up. They want to be drilling in the Q2 of 2026. My
Oh,
problem
wow.
right now, my problem right now, which is like tomorrow, really.
Yeah.
Where are we? We're in March, so they're talking Q2. In reality, it'll probably be Q3. But we're out of rigs. You
Yeah.
know, we've never been so maxed out for rigs. Our utilization as we speak is 75%. And we are going to head towards the 80, probably end up 85% utilization.
Yeah.
And that, as I'm sure you know the industry and the other drillers well enough to know that that would be industry leading
Yeah.
utilization. I think I saw one of the big drillers put out their numbers the other day, and they were talking like 55% utilization. And we're
Yeah.
always, if we were to look at where we were last year and took the average for the 12 months, we averaged 67% through the entire year, but we peaked at certain times. We're around 80, 81, 82%. So, I mean, 70 is pretty normal for us. This year, I'm thinking we'll go higher. Yeah.
All right.
And
From
gold is what, $5,400 an ounce, $5,300 an ounce. A year ago, it was literally half that price.
Yeah.
It was 2,750, I think, when we were doing the same call a year ago.
Yeah.
And so gold's doubled, copper's done the same. Just
Yeah.
about anything else. Lithium's up again. Lithium's back in vogue. Everything that is rare earths, base metals,
It's yeah.
uranium, everything's going up at the moment. And this is a sector rotation. We are in a boom. This is a boom.
Yes.
Make no mistake about it. We are in a boom.
Yeah, and it sure feels and seems like it's at the start of a systemic boom where we just have to get a lot more copper coming out of the ground and a lot of other minerals.
Mm. Mm.
This last year, you generated net cash from operating activities of 24 million US. And even though you're earning, you had some issues with margins, that was an increase of about 3 million from the prior year. You've got CapEx, and you did do some share buybacks last year as well. Do you expect to be doing buybacks as well this year? And any thoughts, given that you're managing your growth a little bit more this year on your CapEx, the general kind of trend on that?
We bought back about 92,000 of our own shares last year. This year already, we've bought back 56,000 shares.
Oh, well.
We will always allocate cash where it's needed and where the investment case is strongest. That could be in the form of share buyback. It can be in the form of dividends. You know, at a quarterly meetings, we will sit and make decisions how we're going to allocate cash, whether we're going to buy rigs, whether we're going to expand, whatever we're going to do. But basically, it's always about returning best returns to our investors.
Dave, we've covered a lot here. Is there anything we should touch upon before we wrap it up?
We didn't touch on the additional tax expense that we incurred in Côte
Yes.
d'Ivoire, and I thought I might just like to just bring you up to speed
Thank
with
you.
that.
Yeah.
So we did receive a tax recovery notice from the IRS in Côte d'Ivoire in the latter part of 2025, which took us a little bit by surprise because we had paid our taxes. And the taxes was for previous years, 3 years. It was 2022 through 2024. And the tax authorities claimed that that they hadn't received the funds, and we claimed that we had paid the funds. And while we were busy disputing this claim, uh, um, the IRS took steps to curtail our operations. It would have made it extremely difficult for us to deal and to operate at a time when we were just about to enter our busiest season, which was in January of 2026. So, faced with a difficult decision, we took the least worst option on the table, and that was to agree to pay the $8.4 million again, which we agreed to do over a series of 8.5 months, more or less 8 or 9 months anyway. So eight or $900,000 per month. It is so. I mean, what this enabled us to do was continue our business and continue to operate. We don't agree with the tax recovery notice, but it enabled us. Our top of mind was to continue operations as normal. Now,
Yeah.
we still have our day in court this way, and that is very much our intention. Is happy to pay the money to keep business operating at the moment, but it is our intention to pursue this matter further. And as I say, in the circumstances, which were challenging to say the least, it was the least worst option on the table.
Yeah, but there still is, you're getting your day in court at some point. Theoretically, there's a possibility of partial or full recovery of that tax payment.
That is the plan, yeah.
All right.
It was that versus shutting down whilst we went to court, which would have, of course, I mean, if you just work out that we turned over $185 million, so you simply do the math on that and say, well, if 35% of that came from Côte d'Ivoire, and then work out what the margin would have been on that. $8.5 million versus say $20 million. It was a no-brainer. It was the simple math was the only commercial decision to have taken was to keep the doors open, keep business ticking along. Worst case scenario is we don't get our day in court, and it's still, whichever way it works out, whichever way you look at it, it was still the least worst option that was on the table to us.
Okay, well, I guess with that, we've had a very good update here, Dave. Thank you very much. Any final words before we call it a day here?
No, that's. I think we've just about covered everything.
Excellent. Dave, thank you very much. Always a pleasure chatting and getting up to speed on Geodrill with you. Cheers.